Welcome to Veterans Corner, and thank you for allowing us into your home today. It's an honor. And today's guest is Mr. Diogo Tavares. Tavares, coming close. And here today to share with us again some more information that he has to share with us. And let's see if we can get into it. My friend, thank you for coming on board again.
Thank you.
Well, tell me this. I know you got some other information you want to share this time around from the last interview. So what is it you want to share with the public and with the veterans?
Yeah, I think, a lot of times, let's focus on the veteran population. That's the population we want to kind of get some information out to. I think that a lot of times when a veteran is transitioning out of service, their number one thing that they're focused on is getting that DD-214 and getting off the post and heading back home. And there's so much great information that's put out there that if they're not paying attention to, they can miss out on. Mm-hmm. I never want to say that this is better than that. It's just options and really taking a look at what makes the most sense. Mike Tyson used to say, everybody's got a plan until they get punched in the face.
Right.
And so, when I'm working with veterans, it's really just educating them and explaining. So one perfect example, since I am with Northwestern Mutual and we focus on life insurance in particular, is when a veteran is looking to transition out, they've had this life insurance, SGLI or Service Members Group life insurance through Prudential the entire time at a very affordable price. They've got $500,000 of coverage, and they're paying $29 to $32 a month for it. And $500,000 may sound like a lot of money, but when you start having a conversation about, well, if this was the last check that you were leaving your spouse, and let's talk about, instead of, it's $500,000, let's talk about what are the things that you desire that you would want to happen if you didn't make it home. And so,
not only that, the 500,000 may sound like a lot, but what it's going to take for them to survive on a monthly basis, on a yearly, how far that they can go. Say, if you were to pass away, that your spouse, they might be able to last 4 or 5 years to get their act together, I guess. Give them a chance to get back in the groove without you, and life goes forward. And your children is able to prosper as time goes on. But you got to give time, though. That 500,000, give them time to at least make the transition without you being there.
Yeah, and that's a very great point, Mr. Greg. I mean, when you're talking with a client and you're explaining how far does 500,000 stretch, and if we take a look at, well, what would be somebody's desires? Well, most people want to have their mortgage paid off. Well, let's just say that an average mortgage is about $200,000. Now we're down to $300,000. And then most couples have 2 vehicles, and they may still owe money on those vehicles. Do we want to have a fire sale on getting rid of that second vehicle where we may not get quite what we owe on it? We want to cover that. Then we talk about burial. We talk about emergency savings. We talk about children's education. Is that important to you or not? And then outside of that, if your income's no longer coming in,
that's right,
how much income do we need to provide your spouse to make sure that your children are living the same lifestyle?
That's right.
Because remember, if a spouse gets into a pickle and they financially have to depend on somebody else, that person is going to become that parent to your children. And is that the right person? Is your spouse marrying out of convenience because financially they need it? Or are they marrying that person truly out of love because they're the best person to put around your children?
Well, I tell you what you said is true. As a veteran, last couple of years ago, 2024, it came out that there was 90,000 plus 90,000 veterans going into foreclosure. Some of them will survive, but some will go homeless. Their children become homeless. That's something to look at. So when you're sitting down there considering what are you doing, you have to look at the long term, not short term.
Yeah, look, I'll share a story with you. I just recently met with a veteran, active duty service member, and several years ago we had this conversation about, look, you've got $500,000 of coverage, and if you didn't make it home last week, what would this do? What would it take care of? Let's assume that we don't have that.
Right.
So what would we want to do for our family if you didn't make it home last week? Mortgage paid off, emergency fund filled. You know, if we die on active duty, yes, our funeral is covered, but if we pass away after, that's another misconception veterans have. My funeral's taken care of by the VA, and that's not true.
No, it's not true.
To a certain extent, there are things that are covered, but there are still some costs that are going to come out of your family's pocket that they have to take care of. So we take care of that. Next question, is education important for your children? Let's forget about the fact that there are, you know, Gold Star programs out there and benefits for dependents. If we have to rely on the government, we're probably not doing our family justice.
No.
So what is it that we would want to provide for our children in terms of education, whether it be from K through 12, after, you know, graduating from high school? So what does that cost? And then how much of your income would you want to, assuming that everything's paid off, the debt's taken care of, we want to make sure that your spouse is living the same lifestyle and providing for your children the same way that you would if you were here. How much per month and for how long do we need to provide that for your children? And all of that will come up with a number, okay? And so in this case, this young guy's number was close to $1.5 million of life insurance is what he needed. And so what we ended up doing was we subtracted the $500,000 that he already had through SGLI, because that's very affordable, great program.
Right.
And we looked to see how much more did he need after that.
Right.
$935 was the number. So we got him $935 of coverage. His family's covered if something, God forbid, were to happen. Recently, he just had another child. He calls me up and he says, hey, I'm trying to pay some of my debt. I think I need to reduce some of my life insurance coverage. That's the first thing people think about is what are those low-hanging fruit things that I can get rid of? When really the priority is what types of subscriptions are we getting, or how many cups of coffee are we buying at a coffee shop? That those are the things we should be cutting back on, not our life insurance, which is going to protect our family.
It's disciplining ourselves.
Correct.
To a new lifestyle.
Correct. And so one of the things he wanted to do was purchase a life insurance policy for his newborn child, which I advocate for policies on children all the time. And people think it's morbid, but there are a lot of other reasons, which is another conversation, but there are other reasons why it's beneficial to have life insurance on children. And I said to him, look, while I think that this is important and I do think you see the value of it, reducing your coverage to help pay for a policy for your child at this time is not what's in your best interest. I said, look, from a commission standpoint, I'm going to earn money if you get this policy. But from what's right for you to do, that's not what's right. If you don't make it home yesterday, your family needs all $935 of this to add to that $500,000. If I reduce that coverage to get your son a policy, we're not going to be doing the right thing for your family. Those are the types of conversations that we want to have with our public and with our veterans who think that $500,000 is plenty. But when you really put it into perspective, that's just not enough money. If I said, hey, this $500,000 is the last paycheck your spouse is going to get, and she's not getting another dime, you know you're not just going with $500,000.
Well, that's what you're saying is very true. I'm just going to use my case as an example. During my crisis, when I lost everything, it took my wife and I 4 or 5 years to get back upon our feet. But when we got to that point, guess what? We had 3 children in college.
Right back in a different situation.
It's a different situation.
Yep.
So life is ups and downs. You have to do the best you can to provide the best way for your family to survive if you're not there. And sometimes it makes some hard decisions. I mean, but it is what it is.
And at the end of the day, my job is not to try to convince that person to keep that policy. My job is to bring up the things that they're not thinking about in making that decision of reducing that coverage or getting rid of it altogether. If at the end of the day, if the client says, I want to drop it, I'm dropping it. I mean, that's what they want to do.
That's their choice,
but I've advised them on all the things that I think they need to do to make sure that they're cared for and taken care of. So I think going back to veterans is, veterans sometimes might have a false sense of security that the government is taking care of them and giving them everything that they need if something were to happen, and that's not always true. The other thing that I think is important for veterans to ask is, if I get life insurance outside of this SGLI, is there a war clause on those policies? Because there are some life insurance companies that, yes, they'll sell you a policy, but if you die in an act of war, they're not going to pay out that death benefit. And that's very important to know.
I was not aware of that.
It is very important. I ran into that situation as a captain in the military. I served as a casualty assistance officer to a family.
Okay.
Service member had been killed in Iraq in 2003 during the initial invasion in Iraq. And I was working with the spouse, and we were looking at a policy that had been sold to them through a credit union that was located on an installation, and there was a war clause. They refused to pay out the claim because that service member was killed in Iraq. And I had to argue with them that, why would you even sell this policy knowing that this person's a service member and can potentially be put in harm's way?
Right.
Why would you even sell that policy to this person? I got legal involved, and they were able to get them on some technicalities. The service member was actually, his Humvee had flipped into a ravine and he had drowned. So I think what happened was JAG was able to say it was really an accident,
right.
not due to combat.
Right.
And so the family was able to get that money. But the point is, service members need to ask those questions. Will this cover me if for some reason I pass away while I'm in war? That's an important question to ask. Subsequently, as we transition out, we have this little thing in the back of our head that says, well, I have VGLI, Veterans Group Life Insurance, and I can get that automatically when I transition out. And sure, you can, at a much higher price.
Right.
And so, it's a guaranteed issued policy, but there are several things that a service member can do. There are several insurance companies that you can transition that guaranteed issued life insurance, SGLI, over to a guaranteed policy with another company. Northwestern Mutual is one of those companies that will allow that service member to transition that over with no medicals. There's some stipulations to it, and I explain that to the veteran. But in some cases, if a veteran can't qualify for life insurance due to health reasons when they get out, this may be a very good viable option. SGLI might be a viable option, converting that to VGLI. But an example might be, and I just ran this for a young guy. He's got about to transition out, and I can get him $1 million of life insurance through Northwestern Mutual for $73 a month.
Okay.
If he transitions his SGLI to VGLI with Prudential, he's going to pay $70 a month for $500,000 of coverage. So he's going to pay more per thousand for that $500,000 than he's going to pay for. So it's not 70 versus 73. It's what am I getting for 73? And that's what I think veterans need to take a look at. Heck, I can get them $900,000 for under that $70 a month, and they still have more coverage for the same price. Then veterans will ask me, well, this life insurance is going to get more expensive, because I generally, when a service member is getting out, they're young, 38 to 42, maybe even younger, depending if they only did one stint in the service. And so, we're qualifying them for life insurance based on their own health, not everybody else's health in the pool. So we'll go back to that in a second. But what I'm looking at is, VGLI every 5 years increases in price. Just like this product that I would recommend to a service member, which is called a Term 80 policy. Every year it's going to increase a little bit. Well, even 15, 20 years down the road, our policy is still going to be less expensive than what you're going to pay 15 or 20 years down the road for VGLI under that new band.
Well, you have to be aware of that information which you have. Now, you brought something up, and I'm asking you this question. I had a veteran came to me. He got discharged under medical conditions. In working with him, what type of problems does he face in getting involved with the insurance? What type of programs could he qualify for?
Yeah, that's a great question. And that's one of the benefits of working with somebody at Northwestern, is that we have access to a lot of other companies that potentially would write that person where Northwestern might say, hey, the risk is too high and we're going to pass on it. So a lot of times I will contact our underwriting team at our home office in Milwaukee and asked them questions. Look, I'm meeting with a 38-year-old male, lives in Louisiana, looking to do $1 million of life insurance or a $500,000 of life insurance or whatever the amount is. And here are the conditions that I'm concerned about. Can you tell me what health rating we think this service member would come back at, or would they be approved at all? And Northwestern can tell me, hey, this is not going to get approved, which instead of getting declined by Northwestern Mutual, now we're going to look at something else.
Something else.
But it also gives us the opportunity that if the best option is to take VGLI or to convert that SGLI to one of these other life insurance companies without having to go through medical underwriting, that might be the best choice. Had a service member that had suffered an aortic aneurysm while he was in service.
And the aortic aneurysm.
So he was not going to get insured through Northwestern Mutual, and there was going to be very few companies that I could probably, very few good quality companies that I could get him approved with. And so at the end of the day, I came back to that service member and said, look, you need more than what you can get, but right now having this is better than having nothing. And the two best options that you have are you need to either convert SGLI to VGLI because it is a guaranteed issue, or you need to convert SGLI to one of these other programs.
I forgot to put it on buzzer.
That's okay. We can wait till it's done ringing, and you can.
It's gonna die down. Usually, it's,
you can end up
scam.
So we talked to this service member and basically explained. The second option is that you can convert it to permanent life insurance with Northwestern or several other companies that are out there, and we can help facilitate that for you. So with this young man, the advice would be, hey, we never know. We don't want to assume that you're not going to be able to get life insurance. We want to ask the questions and find out what's going on first to see if we can get you life insurance. And if we can't, then what are the options that are available that allow you to still do the things that you need to do at some level? So I think that's very important to have that conversation.
Because there again, you're providing information I don't know how many out there are not aware of. That's including the public as well. So in what you guys do, the time and the personal time that you get involved with the person, I find very few people get involved with the person on a one-to-one basis. It's like my daughter, she's a nurse, right? Well, she had to get away from nursing on a personal basis, one-to-one, because it started affecting her. Trying to help them get involved with their life. And it got too stressful for her, so she had to back away. In your situation, you're doing the same thing, but I think you're kind of holding the line. You're telling them the way life is. This is what their situation is like now. So this is what I would recommend, but it's up to you.
Yeah, Mr. Wright, I think it's important to understand life insurance companies, investment companies, financial advisors. This is a business.
Yes.
Right? We're here to earn money.
Right.
Let's not mistake that.
That's right.
Okay. Yes, I am a salesperson. I'm here to sell you something.
Right.
But I think more than that, it's about building a relationship and taking care of a client. If I do that, I take care of my clients, whether they move forward with me or not, that's not the end goal. The end goal is that I provide them with the information and the service that they deserve and need. And I'll tell you, it pays much more dividends if I'm doing things right than if I do things wrong.
Right.
If you don't become a client today, doesn't mean you won't become a client tomorrow.
Right.
If I treat you incorrectly or poorly or without respect, I've definitely lost the opportunity to get you as a client.
Right.
And I've definitely lost the opportunity for you to go out into a community and say, hey, look, I met with this guy or this girl, and they were very informative, and they educated me on these things. And while I didn't move forward with it, that's who I would recommend you talk to, because that person still stays in touch with me. They still check in on me. They actually care about me. And that's what the one-on-one is all about, is demonstrating that I'm here for you in your time of need. Let's get the things done that you need to get done. If it's today, great. If it's not, that's okay too. But at some point in time, that might change. Life has a way of changing.
Well, life changes. Just recently, I did an interview with two female veterans, and they both were in stressful situations. And one thing that they found by being in the military or even out of the military, in the military, they looked upon them just as being a female. That's it. On the outside, the same thing. They can't win, but they need to be involved with people who want to help them go through life. And I find, to be honest with you, there's not many companies want to do that. It's all about the dollar.
I think that, based on our 97% retention rate of our clients, that's one sign that tells you that we care about our people. Northwestern Mutual as a company puts the client first, the policy owner first. We don't answer to shareholders. Northwestern Mutual is not, you can't buy stock of Northwestern Mutual on the New York Stock Exchange. Yeah. It's a mutual company. We work for our policy owners.
Right.
And I have seen Northwestern Mutual on several occasions side with the client even though they didn't have to. So here's a perfect example. Did a life insurance policy for a lady, happened to be a spouse of a veteran.
Okay.
And this lady had a heart condition. And when we first called Northwestern Mutual, they said, hey, this is probably going to come in highly rated, like a third best health rating, and maybe even higher than that. And it could be declined. We won't know until we actually look at the paperwork and look at their health records. And I told the client this, and the client said, well, let's move forward with it. So we applied for $500,000 of life insurance. That's what she needed. And through the process, Northwestern Mutual ended up declining it. Okay. And Northwestern sent both her and I a letter saying, hey, unfortunately, we're declining you on this term life insurance, but we have some other options. We would like to offer you permanent life insurance. Well, when I went to the link that I was sent to do that, there was nothing there. And I contacted our home office and I said, hey, what is going on? And the team that I spoke to said, oh no, this policy's been declined. We can't write this policy at all. I said, well, that's not what you told the client. You sent the client this letter, and this is what it said. And the lady I spoke to on the phone said, well, let me take a look at that letter. And she transferred me to her supervisor, and her supervisor said, Diogo, I'm going to look into this, and I'll get back with you. And a day, 2 days later, he contacts me back, and he says, Diogo, we've made a mistake. We should not have issued this policy at all, and we should not have given a second option. But because we did, we're going to honor that, and we're going to take care of it.
You're following through.
He said to me, we will approve up to the $500,000 that you've applied for in permanent life insurance, whole life insurance, if the client would like it. And I contacted the client. We had a conversation, and she ended up taking not the full $500,000, but she took some of it to make sure that she was taken care of.
Yeah, that's what you do. But I hate to say this is coming to a wrap as well. So all I can say, my friend, thank you for coming on board with us.
Thank you very much.
And hopefully we can come back with some other information in future interviews. So all I can say, my friends, take care, be safe, and God bless the United States.
Amen.
Yes.